All right. Hello, everybody. Welcome back to another episode of Palantir Weekly. We have got a full house here today to discuss a myriad of topics, one of the biggest being Palantir's largest upgrade in the history of the company to $50 by Dan Ives. So we'll be discussing that. We've got earnings officially announced on August 5th. We'll be talking about that. And we've got a new contract from Germany that we'll be discussing as well. I'm here with Vince, Emir, Arnie, and Matt, and we are your hosts for the Palantir Weekly. How are you guys doing?
Good. Sorry, I had to fix my hair and makeup really quick.
Okay. Yes, I got mine professionally done right before the show, so we're good to go. All right, there's a lot to talk about, a lot to get into. Before we get into anything, I think we have to start with this. So, Emir, you started making content, I would say like a month ago, like really on YouTube, and for about a year on Twitter. You got a DM today by someone.
Oh man,
I'm gonna show the picture that you shared with us because this is pretty
Goes down in the DM.
The guy that DM'd you is a guy that you have been following for a very long time. The Dean of Valuations, Aswath Damodaran.
Damodaran.
I'm an Indian and I still said that wrong. So he said, "Hey Emir, I really like your Palantir valuation." Again, this is the Dean of Valuations at NYU. "And I do think that adding a 3P test, I don't know what that is, to your reverse DCF may be one way to illustrate why you can reconcile the difference in investor views. I plan to check out your channel." That's pretty cool. How are you feeling about him reaching out to you?
Yeah, so for people who don't know, this professor of valuation at NYU, probably the world's most famous valuation expert. Highly recommend any content available of him out there. And this, like, getting noticed by Carp for you guys. It's kind of the same.
Hold on,
feeling.
not just you guys. It's all of us. Okay.
All of us. Yeah. It's kind of like you wake up with a smile seeing that. But I have to say, really, like, X as a platform is amazing. Like, over the years, I have interacted with CEOs of multi-billion-dollar public companies, famous people I look up to. Like, what other platform gives you this opportunity to like interact with people so widely? Like, it's so amazing. And I would say he didn't check out my valuation. That's in response to my recent tweet. I don't know if you've seen it, Amit.
Yeah.
And we will get into that after. But yeah, feels great. I hope he checks out my Palantir valuation, gives me some constructive feedback, things he agrees with. I know we have some different approaches and stuff like that. So I'll keep you guys posted on if I learn something or not.
But I just want to give you your flowers here, because it's like, getting some of these high level people to, you care about valuations the most. That's kind of your like lane in content, and this is like the godfather of valuations, right? And he's recognizing you, so I think it's awesome.
Yeah, it's really big. As I mentioned, and I'm not like saying that lightly. It's like getting noticed by Carp. It's like huge to me anyway. Yeah. Most people out there in the chat probably like, who gives a fuck? To me, it's big.
Yeah, that was my sister when I met Carp. Arnie was at my house. My sister was like, "Who the fuck is that?" And I was like, "All right, well, whatever." She literally didn't know. She was like, "I don't care. I don't know what that is." All right, so we're gonna start off the show with Dan Ives. I think it's appropriate to let Dan Ives at least make his point for 3 minutes. We'll listen to it. Some of you have seen it, some of you haven't, and then we will get into the topic of conversation. And the real topic is, does this $50 price target make any sense? Here's Dan Ives for 3 minutes, then we'll get into it.
Yeah, Josh, the AI revolution's here. And when I look at the next step, the use cases, Palantir, I think, is going to really be the one that's front and center in a lot of these deals. And we're seeing that through a lot of these cloud channels, a lot of the work we do in boot camps. Investors, look, if you've seen, they're negative at 6, they hate it at 12, despise it at 18, and screaming at 25. And I think this is a stock that has a massive move ahead of it, given where the AI revolution is heading. That's why it's the Messi of AI.
I was curious, Dan, reading your note, what had changed or what different information that you had to take you to that bull case? Because it looks similar to the case that you had made before for the stock. So Was there more data that you were gathering to get you to 50 here?
Yeah, Julie, it's just in the almost 100 customers that we've spoke with, the conviction level's increasing. I think deals accelerating. And I think what we're seeing on AIP conversion is even stronger than we expected. Now, does that mean for this quarter, for next quarter? But when I look out the next 6-12 months on Palantir, I think this is going to be a golden child of AI. And right now, I mean, institutionally speaking, it's very negative because I think many don't understand or appreciate the true, what I view as the competitive moat that Carp and Palantir built.
Okay, so let's start the conversation there and get into it. We're probably going to talk about this for the majority of the episode, guys, because this is the biggest news that happened this week, and this was obviously the sort of key headline around Palantir. Palantir ended the week at around 28.80. We touched 29.83 at one point, so it was a good week for the stock. But now we got to talk about valuation. So I think we'll start off. We'll start with Vince. What were your raw thoughts to Dan Ives' argument, and do you think it makes sense?
Well, I was very smart and sold covered calls at $35 when we went to very close to $30 a few days ago. And then I started sweating at night because somehow the whole market was pulling back and Palantir was not pulling back. And then Dan Ives came and I'm like, why does he hate my covered calls? And I sold them after this at a, I don't know, $1,600 profit. And I'm very happy. I sleep better at night. The thing is, there's just so much good news. There's so much momentum. And everybody, including all of your guys' grandmother, knows that the growth is accelerating. We just don't have the numbers. I'm curious if Dan Ives knows something, because he said here that his due diligence and confidence is increasing because the deals are accelerating. He's speaking to customers and AIP conversion is increasing. That was like word by word what he said. And I'm like, does he know something that we don't? And we also have, I don't think I'm supposed to say who. We have a guy who's on the front lines and of Palantir, and he said that it's just crazy what is happening. So we all know, I think that's what the market is front running, that the growth is accelerating. We just don't know by how much. And I think that the smart thing is to stay on the sidelines with covered calls and just wait until earnings and then rethink after earnings what we all think.
Okay, Arnie, your raw reaction to the $50 price target. You're muted.
There are many things to say, but let's start from exactly what Vince said, that I think is already an information. Why should he make an update just before earnings, just before the new information actually comes out? He tells, oh, I've been speaking with like 100 customers, but 100 customers is like 100 out of 500. If you remove 100 of the government, that's already a big chunk. So it's like he's having a sense from the conversation that what we were talking for quite some time about the projected revenues for the revenues for the next years, which by the average analyst is to be around 20% going forward. It's like, okay, Dan Ives doesn't believe that at all. And he wanted to remark, okay, I'm confident that things are actually going better, and I'm willing to bet my reputation on that. And the second point, I think that encapsulates all our bull case is, despite the valuation run, despite the relatively growing understanding on Palantir, I agree that still nobody really understands what Palantir is, which is, by the way, our edge and our opportunity, because it will be when everyone will speak about the ontology on TV that we will know, okay, now here we are.
Okay. Let's do Matt, and then we'll get to Emir, because I know Emir has a lot to say. Matt, your thoughts, $50 Palantir.
50's a little extended, right? But I mean, we said the same thing when he came out with the $25 price target, and I was very bearish against that. I guess it was close to a year ago at this point, or maybe it was close to 9 months ago. He came out with the $25, and I think everyone was thinking, was that for the third quarter, or is that for the next 12 months? So I mean, $50 in the next 12 months, I think you'd have to see a large step change in revenue. And I think that if you pull back maybe a little bit about if Karp, when he was talking about 4.5 to 5 billion in revenue by 2025, 2026, if that actually comes to fruition, and then I could see where you have this massive acceleration in growth that just showed up out of nowhere. You start getting that trailing 12-month revenue from all these AIP clients that have just been signed up over the past 12 months. I could see where, the growth goes way greater than 30%, 40% even, and people start to say, oh my God, this is the revolution that we've been looking for. Palantir is the king of AI, that I can see it. But until I get that warm, fuzzy feeling from the second quarter earnings, I think it's very tough to justify $50. But at the same time, I recognize this is coming off of a very fruitful past 2 weeks for me using the product. I see how there's always a use case for it, right? And how you can demote or decommission legacy systems within a business and continue to roll them into Palantir. And I see that I find myself doing that more and more, and trying to do that and justify that. And, that's the front work that I do on a day-to-day basis. But at the end of the day, I just don't think that you're currently making enough cash flow to the bottom line to be able to justify $50. However, I will say, and I'm not necessarily surprised by this, is I wouldn't rule out the possibility that buybacks have started to become a thing for Palantir. And I say that because it might not necessarily be billions of dollars of worth, but you're seeing a massive support in the stock that I haven't seen in a very, very long time. And generally speaking, we know that it always travels in these troughs, but you'll see very early in the morning, it'll spike up. And it's been doing this for the past 2 weeks. It'll spike up about 4 or 5%, and then it'll slowly come down over time. And I think that that's either a heavy institutional buying or the company itself buying. And it doesn't have to be a lot, right? But it just has to be more buyers than sellers. So you're seeing a mass inflow of buyers, in very first 2 hours worth of trading, and then it slowly dies off throughout the day. So that's been part of the reason why I think you see this run up from 23, 22 to 29 that we've seen, over the past 2 weeks. So actually, it's been more than the past 2 weeks. It's been more like the past month. But so there's that kind of feel to it. But $50 is, I could talk in circles forever. $50 to me, even in the next 12 months, I have to see a drastic step change in the second and third quarter earnings.
Okay, Emir, you didn't really agree with Dan Ives' logic around this and the price target. What is your concern with what he had to say?
I don't know what makes you say that. I'm not so sure I disagree. Well, my first reaction was, well, okay, how does he arrive at that? Because we know that sell-side analysts always have some sort of numbers backing their targets. And then, of course, the numbers themselves can be manipulated to arrive at whatever you want. But we got some reasoning after the interview. For his base case, I think per Market Watch, he cites $5 billion in revenue in 2027. And then he puts an 11x multiple on that for his $35 base case target. I know Arnie did some math on the $50 target. I haven't done that. But it's interesting because that's not really ahead of consensus that Arnie was hinting at before. Like, that's probably in line with consensus. For reference, he says they will do 5 billion in 27. I have them at 8.5 billion. So I'm way ahead of that. And,
Right.
I did a reverse DCF to see, like, if you actually do a valuation, what would the implications be of that $50 target today? And it's a bit different from what Dan Ives does. Dan Ives prices the company when he puts out targets, meaning he uses a multiple to arrive at a specific target rather than actually doing a valuation. So I did a reverse DCF exercise. I can briefly pull it up, share maybe.
Yeah.
I'm gonna zoom this in. You guys let me know if you can see. Let's see, share screen. You know, I'm not very tech savvy.
Oh, you're YouTube now. You have to be. This is your bread and
Okay,
butter.
just pull up my tweet.
It's on Twitter already?
many.
Oh, I'll just put it on Twitter, yeah.
Yeah, that's what the Modram found because he was tagged in it. That's why he.
Which
Oh,
means,
he
by
was
the way,
tagged
that
in it.
he's,
Oh, I didn't even know you tagged him.
following.
Yeah, I used the equity risk premium that he calculated for the.
Okay, makes sense.
Okay, so I calculated that if we use a 30% free cash flow margin, Palantir needs to CAGR exactly at 35.171% revenue over, like, for people that say like, well, Palantir is going to grow at 30% CAGR for 10 years, like, just so you understand the implications of the compound effect, this means $45 billion of revenue in 2033. I mean, this is not like impossible, right? This is a bull case, so it could happen. Like, it's not completely out of the realm of possibilities. But yeah, I did a quick calculation of, okay, how do you arrive at the $50 price target? And I'm really curious to hear what you guys think about the implications valuation wise. Now, we do know that Dan Ives does not do this. He simply puts a multiple on revenue from the future. But also another thing before we get into these numbers is that he always, I've noticed this in previous interviews as well, he stresses the sum of the parts.
Yeah.
He's been doing that for a while now, and I don't really get that argument. It doesn't really make sense to me, because the government and commercial businesses should command the same multiple, in my opinion, and that's because they will compound, as per my calculations anyway, at a similar rate over a 10-year period, with commercial being slightly faster, but the revenue share will still remain close to 50-50. So I would be really interested in the Wedbush equity report. I don't know if you have it, Amit. I know that you like to share those
Actually
expensive reports.
Yeah.
Just to see, like, does he share what multiples he assigns each business? I don't know if he discloses that to his clients. But yeah, without any numbers, it's hard to put any weight on it. But yeah,
Arnie?
I'm really curious why he stresses that.
Arnie, do you think what is your reaction to this to get to $50?
Well, it's not beyond the realm of possibilities, because we were used to think of, oh, please return to 20% growth, please return to 30% growth, which was the long-term guidance that Karp initially gave. But the context was very, very different. So the thinking exercise that we can make is, how much different is Palantir now compared with what it was last year? Like last year, if you look at it from a numerical standpoint and also from a qualitative standpoint, it's like, whoa, like this stuff may be too hot compared with what is currently right now. But the evolution that has been on the track, like in this year, changed completely the trajectory. And what if this improvement in the trajectory keeps improving, keeps compounding going forward? We can't.
But do you think that could
know
CAGR at 31% a year?
35.
Or 35?
That's obviously very ambitious, but given the context that we have right now, I would not exclude that. What I mean with that is, how do you actually get to that 30%? You need to have a lot of customer acquisition, and I would argue, okay, the go-to-market now is firing on all cylinders. Like, we have evidence week after week, feedback after feedback, that the go-to-market motion is there. The market fit is there. And once the market fit is there, you have a compounding loop of, oh, actually, this stuff works. And you have the network of clients saying, oh, this stuff actually works. The customers see that, oh, this stuff actually works. And the bigger the network of the clients, the more compound effect you have. So we should not exclude that we could see something even crazier, like 40% or 50% to be sustained on the commercial side. On the government side is more difficult because it's already like more mature, but there we have always the opportunity of a big drop out of the sky of a huge contract that changes the trajectory. By the way, in this last quarter, we got Titan and Maven, which are the most important contracts for the DoD, which sets the basis for capturing the following next big contracts going forward, because you have these important deals and you need to give them to someone who has already the reputation, the standing, the tech. So there are not many choices for that. About the double, like the sum of the parts valuation, I would agree, but not fully agree. What I mean with that is typically
with me or Dan Ives?
With both of them and neither of you. What I mean with that,
I was so philosophical. That was a carp answer.
So let's go back to what it was October 22. So I wrote this article back then, inspired by Bank of America, because that's actually how Mariana was providing evidence. Look, guys, at this price, you buy commercial and you get defense for free, or it was the other way around. The point being, if you actually assess the value of each component, you arrive to a value which is way bigger than the value the market is giving to it. And the way I believe the sum of the parts tool should be used is more to assess the downside rather than pull a sense for the upside, because this is a kind of valuation that tends to give you very big numbers, especially when there is a component of a business that is very hyped, like for instance now the AI saga. So what you do essentially with these models is you take a component of the business. So back then it was like the commercial side. You put the revenues and you put a multiple on it. The government side, you put a multiple on it. And this was essentially very close to what Bank of America was doing. And the key determinants of this valuation is, okay, but what multiple do you actually put on that side of the business? This was 2022 at the bottom. Growth was stagnating. All the multiples were depressed. So also by definition, when you put a multiple, relatively speaking, that is a low multiple. And now the context is very, very different. What Dan Ives essentially says is the government side, yes, is fine. But the commercial side, that is where you can potentially put a crazy multiple on it, because that is what all institutional investors want. So institutional investors kind of want the defense tech side, but they're really salivating for the AI part. So essentially, if you put an okay number for the government side, and then you put a crazy high valuation multiple for the commercial side, you get the valuation.
So it's not so much about actual expectations from each. It's about what's more attractive for institutional investors. So like, what are you excited about? So it's not actually about if both will do, let's say that both will do 30% for a 5 or 10 year period. It's not about that. It's what's more sexy in their eyes and therefore commands a higher multiple rather.
Yeah, so in theory, you should look like you should be neutral and say, okay, what is the money printing machine here? But in reality, we are beasts of emotions. We desire stuff. And when you desire stuff, everybody will desires that stuff. You are willing to pay a much higher multiple, which is why the AI commercial side is very appealing so far for institutional investors. Also because there are not many choices, and Palantir is already GAAP profitable now. So now it is even hard to find bear cases against, apart from saying, oh, it's pricey.
You know, this also ties into the most expensive SaaS dynamic. Currently, I believe that Palantir is the most expensive SaaS company.
Yes.
Right. And the interesting part here is that there's so much uncertainty that even looking at this 35% CAGR, it's like it's not completely unreasonable, right? And in regards to being the most expensive SaaS, it has to be someone, doesn't it? And also, if we consider all the dynamics in regards to Palantir, it does kind of make sense that Palantir would be up there, if not the one. I mean, as we talked about, they're in the most lucrative space of the market, being AI. They have software with strong network effects, and we know that they are expanding that network rapidly. We know that the revenue growth has upside. We don't know how much yet because we haven't seen the implications of the boot camps. But there's so much uncertainty that even like a 35% CAGR is not completely out of the realm of possibility, which to me makes sense that Palantir would trade as the most expensive SaaS. I mean, there's just so many unknowns and so many sexy attributes to the company itself that kind of makes sense.
Let's make a very small thought experiment. I think we can answer 3 key questions. First, is Palantir positioned where the money is flowing? Yeah. Second question, is Palantir able to have a market fit right now with this dynamic? Is like all the products can actually capture that? And the third is, can Palantir answer positively to the monopoly question? Meaning that in 5-10 years from now, Palantir will be in such dominant position where it can capture, obviously not 100% of a market, but the big chunk of the profits of that market.
So those are 3 really good questions, and I think that sets up the conversation to go here, which is you use the word sexy. Why is Palantir getting that sexy premium, right? Because I mean, this chart is pretty incredible. I think Arnie, you took this chart even after CrowdStrike took a dip today. But CrowdStrike is known to be one of the more expensive SaaS names. It gets a premium because of their growth. Cloudflare gets a little bit of a premium, but Palantir is getting a hella premium. The thing Palantir doesn't have that CrowdStrike does have is the growth. So I guess the question is for the broader panel, why is it getting that premium? Is it institutions? Is it Dan Ives pumping it? Like, what is happening where people are getting excited for Palantir? Let's start with Vince.
I think that we are front running that the growth is coming. Like I think even if you ask your grandmother, she will know that Palantir's growth is accelerating. The question is just by how much. And I wanted to raise another point, which is we are all very analytical here, and we are thinking that the stock is going to move in proportion to the intrinsic value of the company, and then we're looking at like how can we reach 50. But I tell you something, we can just reach 50 from pure market euphoria, with the intrinsic value of the company still being in the 30s.
You think the euphoria is high and could get high enough on Palantir to take it to 50 without the growth?
I think so. I mean, like there is going to be a growth increase. This I'm zero doubt. It's just like, what if the growth increase is to 26% and $50 you would need 35 point whatever. Emir, I came to a very similar number, right?
Right. Emir, why do you think Palantir is getting the premium?
Yeah, as I just mentioned, there are various dynamics that makes Palantir as a name so sexy, but I think just adding to what Vince said and what we discussed before, the biggest factor here is that everyone knows there will be revenue growth, upside. What we don't know is how much. And that speculation can really, really run wild. Like, we don't know if 30% revenue growth is reasonable. We don't know if it's 35, it is 40. Like, there's no ceiling on this. Like, we simply don't know because this is completely new. Like, to my understanding, there's never been a similar revenue model being implemented in the public markets before. We don't really have a predecessor. I mean, AI is completely new. There's just so many unknown factors that makes it exciting and interesting to follow the story of Palantir. So that's why I think it commands such a high multiple currently. But yeah, like just even us that have been following the company for years, like even we can discuss and say that, well, 35% is not completely unreasonable. Like, that's saying a lot for the company itself. And it's a really exciting story. I don't know much about CrowdStrike, which I guess held the title prior to Palantir. But if you look at CrowdStrike, I mean, they are way more narrow of a business. They address a specific thing, whereas Palantir addresses everything across every industry. Like just that thought alone, I think commands a high multiple in itself, that they can really address any market they set out for. And heavily regulated, not regulated, doesn't matter. The only thing that matters is if you're Western country or not. Like that's the only thing.
One thing that I would underscore is that CrowdStrike is an excellent company. Essentially, it was trading at such a relatively high multiples because it really has the golden combination. We often talked about the rule of 40, which is a simple way to assess how good a SaaS company is by summing the revenue growth percentage and the free cash flow margin percentage. And CrowdStrike is on the top of that list with a great combination of like 30-something growth and 30-something free cash flow. Even better than Palantir right now. Now, what I would underscore is exactly what Emir said, is this is a specific field, while Palantir can potentially solve almost any problem. And by the way, I understand that if you have a Palantir developed full scale, you don't really need to spend that much on CrowdStrike. But apart from that, that is a relatively small market and a very competitive market. How many companies there are that can eat the CrowdStrike pie like in no time? We have a Palo Alto.
Elon literally canceled his subscription today after the whole debacle for Tesla.
Exactly. And we know after 1 year, also Google is buying another another competitor. Google bought previously Mandiant. So it's like Google is getting interested in the space. They have the solutions. So it's like, think of it. There are already like 4 or 5 companies that can do exactly that. And they were all growing, but they will fight for that pie. And the Palantir is on the most ambitious pie, and so far it is the only player in the government side, the only player in the commercial side, which means that when the market wakes up and realizes, oh, I really need this stuff, essentially Palantir can capture literally the big size of this new money flowing into AI. And one thing that we think we never really discussed enough, because it is hard to think, is about the margin expansion, which is what surprised a lot Mariana in the last earnings call, saying, I was expecting something like 25% free cash flow margin. Like, how the hell did you arrive to 30? And then even later, it's like, I don't really understand how you can expand the margins so far. And thanks to Chad, for instance, we have an intuition here. And last week, he shared a chat with another guy who was essentially responsible for using Palantir inside Palantir. And essentially the guy said, well, we have been developing Foundry and AIP so hard in our company that we started generating meaningful meaningful savings. Guess what? That is all earnings margin acquired. And now let's make a thought experiment. How many more people does Palantir actually require from here to keep scaling? The reality, yes, they still need more people, but not that many compared with a Snowflake, compared with all these other guys that don't really have the structure to create AI agents. So which means that for Palantir, you hire a new person only when you really need to do something that an AI agent can't do. While for all the other guys, they just need to hire more people. So considering everything, I believe that, yes, we are optimistic, but as Peter Thiel says, we tend to often underestimate how well something works when it works.
Right.
And I believe there is space both for the growth and the free cash flow.
Vince, you want to play around with your model a little bit? I'll share it right now.
Yeah, sure. I mean, it's much simpler than Emir's, and it's basically based on the adjusted operating income. So this is X, the what is it called? SBC, 32% margin and 3% dilution. I think they are doing more than 3%. And in 20, I just wanted to play around with what it would take to get to a 50 share price. And I'm here going to use also a multiple, but it's a free cash flow multiple. So as you can see, currently what I'm thinking with is 25% growth, 32% margin, and a 50 free cash flow multiple in 2025. And it gives you a $24 price target in 2025. Don't hate me, guys. So if we increase the growth to 30%, and this increases it, all the way in the table, then we come to still only a $26 price target. So we also need to increase the adjusted, like the free cash flow in the company. Let's increase that to 35. We can see that we're still only at 28. So then we also have to increase the multiple. Let's increase it to 60 to make it double the growth multiple. Then we're still at a $34 price target, which I think is the base case for that. I mean, his base case was 35. So now let's increase the growth to 35. We are still at 36. And basically the only, like the free cash flow, I don't think it's realistic that we will go to 40 on a sustainable path. So the only thing that we can increase, that's a very, very, very high free cash flow, but fine. I give in just for the sake.
No, I actually think you can make an argument for 40, but maybe for a different episode. Let's not get into.
Yeah, I'm just gonna tell you what I don't like about this, but let's put it in. We're still only at $41. So now let's increase the multiple again to double the growth. Now to 70. Then we're in the ballpark of Dan Ives's bull case. And the only thing that I don't like about this is I feel that if I would be holding Palantir and this happens, I would be very happy. But to buy Palantir at this level, you're basically this has to be your base case. And if anything goes wrong, like their growth becomes 33% or their free cash flow is not 40, is 37, which is still crazy amazing, or the multiple that the market assigns is not 80, it's 60, which is still a very, very high multiple, you're going to lose out on your investment, and I don't like investing that way. And I think none of us invest that way. I much more liked, when Palantir was down in the 6s and in the trenches, and the government was free and you could just buy commercial. That's a much better way to buy. But
can you summarize what you did in your model? I don't get it. You put a PE multiple on what year and how much did you reach?
On 2025.
Okay.
So, and but it's not. It's a free cash flow. So this is the revenue, and then if they have 40% free cash flow, then they have 1.6 billion in free cash flow in financial year 2025, right? And then if you put a free cash flow multiple of 70 on that, then you get a market cap of 113 billion. And then if you divide it back with the amount of shares, where I'm thinking with 3% dilution, then you get 48.
So every period after next year does nothing in this model?
No, like it does when you go all the way here, right? Then you have a share price of 187 with the same method.
Yeah. But I mean, just for the target, like it doesn't matter what you have in like 10 years, just what you have next year. That's
exactly because I'm trying to see how to get to Dan Ives's what is it, like price target in 2025 as a fair
those
value.
Price targets are 1 year out, right? So that's why.
Yeah.
Yeah, but luckily now, you probably did this before, but he came out on Market Watch, and as I mentioned, we know his method now, so we could probably reverse that to get the $50 target, which is he takes 2027 and puts a multiple on that revenue, so he does price to sales. So yeah.
So let me ask this question in the chat, because I think this gets the broader question. From Luna right here. I don't understand who's buying at these prices. Feels very toppy. I loved it at 20 to 22, waiting for the NVIDIA quarter. NVIDIA quarter would be, I would imagine, at least 30% growth. Do people agree with that sentiment, that like all of us that understand a company pretty intimately feel a bit uncomfortable paying $29.30 for it? So to Vince's point, he's kind of also confused, which is like, if you're buying it now, the risk to reward is not amazing unless the growth like dramatically gets better. Which begs the question, are the institutions coming in and holding the price, as Matt was saying, in this like range where it's just not dipping? Or is that retail? Is that people like us that are just getting into the stock and holding it? Matt, you can give your thoughts.
I think, yeah, sorry, this headset keeps dying on me, so I'm trying to charge it, so apologies. I mean, to me, the way I look at it is at the moment we're set up for success. If we don't really meet some sort of 20-25% year-over-year growth rate in the revenue, I think we're going to take a big tumble. And what I think that we're looking at here is we're setting ourselves up for some sort of like 30-35% year-over-year growth. Now, if it happens, then I think it warrants the $28 to $30 range, sort of price target in the next 6 months or so. I get that. Maybe I'd move my price target from 25 to 30 at that respect. But unless you get that, you're going to see the price tumble after earnings. And so I'm kind of curious to see where we're at with respect to the year-over-year growth rates. I just don't foresee it being at $30. But where I do think that we've been supported is you've seen a lot of this inbreeding and maybe not inbreeding, but fighting between Databricks and Snowflake, and the stumbles that they've had. And so at the same time, you've just continued to see Palantir deliver, get more clientele. They're showing up in a positive light, whereas these guys are like fighting back and forth like brother and sister. And Palantir is kind of like, doesn't even really shrug. They're kind of like, yeah, we know what we're doing. We've been doing it for 20 years, and we're just going to continue to deliver and do what we do best. And those guys are concentrating on like one-upping each other. And it's just like, it's not even a competition that Palantir even wants to entertain in, because they know that they're already superior. So I can kind of understand where people might be cooling off from Snowflake. They might be cooling off from Databricks and saying, if we were to choose a company that is in this space and is a leader and will probably be the number one leader, it will be Palantir. And whether or not they believe it or not, it's not to say that you're not going to have a Snowflake. It's not to say you're going to have a Databricks, because they do fill a different niche, right? They do fill a different piece. They're not all apples to apples comparisons. But I think if you're looking for AI and you're looking for somebody that truly solves big problems, that's Palantir. If you're looking for more of the everyday, that's when you're dealing more with Databricks and Snowflake. But that's just my opinion.
Arnie, do you feel comfortable with the run-up going into earnings? And you can kind of give your thoughts on earnings as well. Or would you much rather have it in the 23 range, and then if earnings is decent, then it makes the next leg up?
Good question.
Because the risk is, if we're $29 on the day of earnings, kind of the same fate lies in Q1.
Not necessarily. As we mentioned, there are already nice expectations backed in the price, but there is a lot of room to surprise, especially on the confidence that the company can share of saying we were going to grow much more than 20% in the future. And I reiterate that since last year, so since the beginning of 2023, when the growth was still not there, AAP was not there, these analysts kept their revenue growth estimates unchanged for 20%. Now, I would argue that the context, the ability Palantir to capture the market is very, very different from last year to now. So that could change everything. Now, realistically, it doesn't really change much for me because at this point that I'm seeing all this convergence of market fit, the company accelerating, everyone inside the company being excited to capture this opportunity, I feel that it would be very different from, let's say, reducing as I did last year, where the price moved up, but there was no real execution yet. There was still no real product that was changing the trajectory. Now, I believe this is more of a time, at least for us, not to buy, but be ready to buy potentially if something stupid happens, because we are seeing that dynamic is really working.
Which is what happened in Q1 when we fell 30%. I mean, that was a stupid dip, right?
That was what I would define a stupid crash. Probably that, well, part of the crash was justified by the fact that it had a relatively stupid run up just before the earnings, because everyone was expecting to make like a plus 30% in a day, like in the Q4 release. Now, I don't really care if it happens or not. As how I am as an investor, I try not to rely on these things, but I try more to capture excesses if I see them. Let's say before earnings, we see like a run up to 35. Okay, maybe it makes sense to adjust the position a little bit. If we don't, okay, let's wait. If we crash to 20 before earnings, then it would be maybe a nice opportunity to add. So that's why I tend to be ready to spot the stupid movements and wondering who is actually buying here. I personally received messages from friends, or so retail friends, now getting interested into Palantir, even if I spoke about it like for 4 years now. So that could be a hint that retail are getting interested again. But I believe at this point, the big chunk of interest comes from institutional investors that are feeling they're missing the big boat. Because at this point, all institutional investors are realizing, okay, this AI space could be a very big theme to surf, and we need to be exposed somehow. We don't.
So let me ask you this question, Arnie. Let's say you're right. Institutions are buying right now, which I also think is happening, and they want AI exposure, but then the earnings isn't good. Like, it's not signaling the capitalizing of the AI space yet. Maybe it's a couple quarters down the road. Do those institutions sell, or do they think it's a good opportunity to get even more exposure?
I would, at this point, given this context, probably to add more, because there are not, as we mentioned many times, there are not, like, the AI theme is real, is probably a very, very big theme to follow. And this has been remarked also by top tech investors like Co2, that shared, just to give a sense of, okay, we all know that Gen AI is the big theme after the internet, after mobile internet, after the cloud. We know now Gen AI is mooning. Okay, fine, but how mooning do we actually expect? And they see the size of this movement to be crazy and crazy long. To give a sense, like this cloud movement that brought Snowflake to be the darling of Wall Street is something that lasted like for more than 5 years. And the Gen AI movement has just started. We are just seeing this flywheel in motion. And when institutional investors see this stuff, it's like, wow, like I need to get exposed and potentially increase. Now, let's say they disappoint for a little bit, but the earnings are still good qualitatively. Okay, maybe I can wait a little bit. So remember that institutional investors, most of them don't reason like us with a bottom-up approach. They tend to reason more with a top-down approach of I need to be exposed to that particular theme. And then they ask, okay, what are the stocks that best represent that theme so that I can be exposed to this theme in my portfolio.
Okay. Let's talk about this topic. I actually forgot this happened this week, but like it did happen and we should probably address it. Donald Trump picked JD Vance as his VP. JD Vance, for those that don't know, I'm not going to get into all of the juicy details, but the point is Peter Thiel funded his venture capital firm, funded his Senate campaign in Ohio. They're basically boys. I mean, like, they know each other. They know each other really well. I think part of the reason Peter Thiel didn't want to get so political this year is because in the back of his head, he knew that Trump was going to pick JD and that eventually he would get the influence that he wants because Peter Thiel always wins. It would just be not having to be as public about it as he was in 2016. And that actually got some blowback, obviously, for Palantir. So the question, let's start off with Emir. If JD Vance is the next vice president of America and Peter Thiel calls him and says, hey, I know you guys are thinking of this contract, you know, I gave you a lot of money. I think it's 15 million over the past decade. Do you think this has any influence on Palantir's overall growth?
You know, I have no idea how much influence a VP position has. I'm not from the US.
We know, because the commas in your model make it very obvious you're not from the
yeah,
United
but
States.
also at the same time, like historically, we know that Palantir lobbies like hard. Like we know that they have put board members that have been like high up in the military and various other spaces. Like we know for the NHS deal, they like acquired higher ups that previously worked for the NHS and stuff like that. We know that Palantir lobbies pretty hard, so it's pretty. Like we can only speculate, but it's a pretty strong move by Thiel to
I feel like it's
acquire a
bullish,
VP.
dude. I feel like it's bullish.
Yeah, I think at the very least it won't hurt Palantir. I don't know the implications. Like I don't know if it's in reality, like JD Vance's like agenda is like, well, let's promote Palantir here.
Yeah, I don't think Peter Thiel literally says, hey, give us the contract. I think a new contract comes up, a new bill gets passed or potentially gets passed. And JD talks to certain people that make the decisions of, hey, you should look at a company called Palantir.
Yeah, like a nudge or like hint.
Yeah, it's like if you have to pick between Microsoft and Palantir for a certain contract, here's why he could advocate for Palantir essentially because he's worked with the software. He funded companies that also use the software.
Even before, you need to have the government actually expressing the willingness to have these kind of solutions. And his mind as a tech investor, he actually he's invested also in Unreal. So it's like he knows his stuff. He's very connected and he understands the needs. So which means that the famous percentage of AI software being deployed by the DoD, which Emir explained very well, that, okay, this is where the big opportunity from the US government is the DoD is spending a lot of money, more than $100 billion per year, but it essentially spends nothing in AI software. So if Palantir can push to this percentage to increase, the lobby works, and there is willingness from the government to actually increase and issue new contracts to increase this percentage, that is where the market completely opens for Palantir. So more than, hey, have a look at Palantir, I believe the key change would be in having a very focused agenda into digitalizing the DoD, but then all the other agencies.
Yeah, and I also don't know like how dirty the American government tender system tends to be. We know that Palantir has capabilities that a lot of different providers do not have. So in Sweden, for example, I don't think it's corrupt in Sweden, for the record. But when you put out a tender, you have criteria that the solution or software needs to meet in order to be able to bid for the contract. And it's very easy to isolate Palantir as the sole provider eligible for the contract by simply putting in criteria that only Palantir can meet. So, yeah, I mean, it's interesting times ahead. I think JD Vance in general won't be bad for Palantir. Very interesting connections deeper down. Thiel doesn't lose, as you mentioned. So, yeah, I think I'm looking forward to this Trump presidency overall.
Vince, your thoughts?
Yeah, I mean, the same. It's definitely not going to hurt. And I think Palantir's mission statement as a company of, protecting West and making sure that, the West is more productive. I think it resonates really well with the whole Trump presidency. So I for sure it's not going to be bad times.
Matt, any thoughts on JD Vance?
Not necessarily JD Vance, but just the Trump presidency as a whole. Now, let's take a step back. I think regardless of whatever president, I believe Palantir will continue to be extremely important in the government within the United States and many others across the world. But I think it'll be stronger underneath the Trump presidency. I think you'll have a stronger Department of Defense. You'll have a stronger Space Force, and all of that, I think, will be relying heavily on Palantir, as it has a lot of experience. And Black Sky also is another piece that I believe will continue to be dominant within and getting further contracts with the U.S. government. They're EBITDA positive at this point. Many people don't necessarily keep track of that. It was one of the SPAC investments that Palantir had. I don't think they have any percentage or anything in it, but they are still using Palantir software. Yeah. So I think at the end of the day, that continued satellite and space total addressable market will really help Palantir, because they've already demonstrated a pretty good step forward in a lot of that places. But a strong military under Trump and JD Vance and that connection to Peter Thiel, I think will always bode well.
Okay. All right. Last thing to talk about. This was really cool to see. The Germans are potentially back for Palantir. So small contract, 5.4 million euros in the state of Bavaria. I found out Munich, Berlin, and Stuttgart are not states this week. I confidently said they were states in Germany. I was humbled quickly. Bavarian Police Department officially got the go-ahead to use Palantir software after piloting it for about a year. Going to be catering data to about 40 million people. And Karp has previously said that Germany really needs to get their shit together. They don't really have a tech sector. They want to build a different version of Palantir. The entire country has not adopted Palantir, obviously, and if they did, that would be massive growth for their international revenue. But this one state adopting it in what is a monetarily small deal maybe could be further evidence that Germany will come back to Palantir. Here's a couple of seconds of Karp talking about Germany, and then we'll talk about why this matters.
I said this before, I'm just quoting myself, which is always obnoxious. Germany has one of the best tech scenes in the world. It's just in Canada and Silicon Valley. It's not in Germany. You change that. And by the way, there's the sense of urgency. It's not there. And instead of getting people who are creative and interesting, you have too many consultants, too much money, and these copies of American tech companies. What does it say about this incredible culture that, there's the people who are creative and tolerant and interesting are building some of the best companies in Canada and America, and you get these, not always, but often third-rate copies of a wonderfully interesting company, and billions of dollars in spend. I said this.
So because we're talking about Europe, we're not going to be biased here. We're going to start with the Europeans. Arnie, Germany, does this mean we're coming back?
Isn't this similar to the NHS saga? It's like they want, they can't, but hey, we need this, and no, we do it ourselves. And then, oh shit, like this stuff is difficult. We need to deploy something that already works. And what's interesting is the more the time passes, the more difficult it will be to actually build a Palantir-like solution that works, unless you are very, very heavily funded. So good luck into saying that. Now, I need to underscore that Bavaria is not just a tiny, useless region in Germany. Like that's one of the top regions, or I'm not sure region.
One of the largest land masses, and it has the largest GDP, I think.
Exactly. So it's one of the
home
most
of BMW. Home of BMW, Tesla, I think, and or a lot of car making there, in a way.
Exactly. So even if, as you underscore, the size of a contract, which is expected to be like 5 million per year, is not that huge, it is still relatively something. And I would say if it really works, makes these guys happy, that literally opens the door for what was the plan like since they start. Well, let's spread this stuff across all the states, regions, and then guess what? What could potentially happen? Now the cool stuff is having the precedent in the US and in the UK, how Palantir actually is helping all the agencies, in particular the healthcare space, that is already a door open. So it's like getting the very first sign of approval in an important region. Is truly what matters, because it's like, okay, you finalize the sale, and now if the product truly works, as we are betting on, now we have the door open to keep scaling across Germany. And if we can capture Germany, then the door to France, Italy, Spain is like boom, because it's bad to say, but then an oversimplification of how the world works is the UK follows the US, Germany follows the US, but all Europe follows Germany. So it's like once you check Germany, then all the other European states follow, because that's the most powerful country. So you need to capture Germany, you need to capture France. Once you have them, all the more peripheral countries, and I would include Italy also here, they just tend to follow the lead of these two countries.
Vince, your thoughts?
That once again, we can say that Karp is not a BS artist, and when he says certain things, he really does mean them. And I remember when a long time ago, many moons ago, he was banging on the table, the stock price was down in the gutter, and I think that was the time when we lost Germany and international was really not doing good. And he said, you guys will see, they will be back. It can happen. They will figure out that they cannot, it's not so easy to make Palantir's products. And at that time, many YouTubers were selling and saying that Karp is full of S and he's arrogant. And he was just speaking the truth. And now they're back. And I full-heartedly agree with Arnie that the more countries that they have, the easier it is to go to other countries, because, you know, friends can say like, okay, we don't trust the US, but like the UK is using them and they didn't steal their data. Germany is using them and they didn't steal their data. So it gives us permission to also try to use them.
Emir, your thoughts?
Yeah, in in general, I think this has political implications, and as a Palantir investor, you just have to be prepared for that. You know, we are very much affected by politics, and politically, we know that there's been a lot of tension in regards to Palantir in recent years, which probably has hurt adoption of their solutions a lot. But that's changing, is my feeling. You know, public perception of Palantir is improving and has been for quite a while, cemented by the NHS deal, starting to break the mold, like in the UK, as the previous speakers mentioned. But my view has been that the left leaning on their political stance are more likely to be opposed to Palantir. And perhaps that's rooted in the, you know, whole Soros misinformation campaign, which seems to have dried out. I think I forgot the agency name, but I recall that they just stopped. They like crawled back to the hole they came from. No, but they deleted like their ex account and stuff like that. You guys know who I'm talking about. This woman who was gonna like debate the head of the UK of Palantir.
Yeah, she ran away.
Cory something.
Yeah, I forgot the name, but yeah, there's been a shift Europe-wide, where the right wing is gaining a lot recently, like across the whole Europe, across various nations. And we recently had EU elections, and the right did very well. But still, I am surprised that this Bavaria shift came so quickly. I would expect that to unravel for at least another 12 months. But it's always interesting how customers keep coming back after leaving. Now we have multiple examples of Palantir customers dropping the software only to come back. In this particular case, we know that the actual users of Palantir weren't dissatisfied. It was like purely political. Like they wanted to keep using Palantir, which makes this whole thing so interesting. But as we mentioned, like the floodgates are slowly opening. The more and more rooted Palantir gets in various major European countries. And I always felt that Europe should fit Palantir like a glove. Like Europe is highly regulated. And we know historically that Palantir is able to conform to just about any regulation. In fact, they welcome it because they know that competitors aren't able to just change their offerings on a dime the way Palantir can to conform to basically any regulation. So in summary, very positive to see. I expect a lot to follow in Europe in general. It's been lacking. Carp has been mad. Though globally, Palantir is not doing too poorly compared to the US. Like one would think that when you listen to Carp speaking that the US would comprise like 80% of revenues. It's not the case at all. Even the growth of the other regions are actually quite good. So yeah, interesting to follow.
Can I share a little bit of a timeline of things that happened? July last year, all the 16 federal states had spoken out in favor of Palantir. However, the Federal Ministry of Interior rejected for political reasons. We had the failure to adopt a nationwide Palantir, starting from Hesse, North Rhine-Westphalia, which is again one of the most richest regions, and Bavaria. They failed in the proposal. Then we had the Germany expressing the willingness to add more defense budgets, but here is the juicy part. March 2027 of this year. Criminal investigators want to use controversial Palantir software to counter terrorism. And here, due to
that's the most bullish, dude. That's the most bullish.
Terrorism, the federal security authorities should now follow suit. Experts are demanding. So it's like no politicians, like the experts in the field. They say, we want this stuff. And why they want this stuff? Because this shit works.
You know how I remember this title? Because I paid a $30 subscription to get access to the full thing for Hanselblatt. And I forgot to cancel it for 2 months. So I basically paid $90 for this article. But
Yeah.
I like, this is a big deal, dude. Like, the experts want us. Bavaria's finally using us. If we actually capture all of Germany, how much additional revenue is that over the next couple of years?
And look, this stuff hasn't reached Bloomberg. I knew because of you, because of Lord Grimm. Otherwise, I would have missed as well. Which means people in the financial industry still have no effing idea. And I would underscore that in the same way I could show these past tweets, I would underscore that by following the story weekly, we have a sense of why this deal is important when eventually it comes out. So again, I believe we are keep compounding an advantage in the same way Palantir keeps building an advantage over the other SaaS companies.
Matt?
Yeah, I think it might have been the last time we had Palantir Weekly or 2 Palantir Weeklies ago, but we'd had this exact conversation about countries that were previously against it, and now you had the June 9th, 2024 election. Emir just basically said this in Germany, and now immediately this has happened. So Sagi, like I literally been talking about this for months, right? Yes, you have these people that have certain political swings, but generally speaking, the pendulum swings to the other side, and they'll eventually be crawling back to Palantir. And was is good for Bavaria is sehr gut for Deutschland. And I think at the end of the day, I think this is going to be something that will be spreading across Europe. A lot of people rely heavily on Germany for influence and political influence within the EU, and so I think it's going to be extremely beneficial in the long term. And so I think Emir is onto something. I think we've had a lot of folks and a lot of people against Palantir, and especially in the EU, for quite some time. And I think it's time the pendulum swings, and I think it's swinging more so in our favor. And good news from the NHS and good news from Bavaria. And I think you'll continue to see more pockets of influence continuing to grow as time progresses.
as Lunar mentioned, France. Don't forget that there are the Olympiads, and France is scared shit of having internal turmoil. So paradoxically, the more turmoil, the more fear there is of turmoil, the more France, which again has been quite adversarial to Palantir, it was willing to, okay, F Palantir, we build our own stuff already for quite some time. When you have a critical event like this, you really need to have something that works, that is already proven. You can't just test a random software that has not proven on scale and has not proven in real world, because we know just from yesterday how critical software is in our life. A potential line of code, a simple comma put inside of a dot can make half of US blocked in their daily life.
Yeah, no, software matters. It's important, and seems like Germany is starting to recognize that as well. All right, I think that is it for us. We've got earnings in about 2 weeks, so next week we have 2 more episodes until earnings, right? Yeah, about two more episodes. So we'll preview earnings over the next couple of weeks, and August 5th we'll see what we got, and we'll keep going from there. All right, thank you everybody. Hope you guys enjoyed. Everyone's Twitter is in the description. We'll see you guys next week.
Have a
Bye,
good
everyone.
one, everyone.
Yo.
Ciao, ciao.